a CAGR, a compound annual growth rate, for the next several years of something like 50% for what they call accelerated computing chips that go into AI. That's pretty explosive growth.
He will tell us where he is finding it on Consuelo Mack Wealth Track.
Funding provided by ClearBridge Investments, First Eagle Investments, Royce Investment Partners, Baird, Matthews Asia, Strategas Asset Management, and Women Investing in Security and Education.
Hello and welcome to this edition of Wealth Track. I'm Consuelo Mack. When Bill Gates, Microsoft's co-founder, calls a technology revolutionary, you have to pay attention. In his Gates Notes blog from earlier this year, he pronounced, "The age of AI has begun," writing, "In my lifetime, I've seen two demonstrations of technology that struck me as revolutionary. The first time was in 1980 when I was introduced to the graphical user interface, the forerunner of every modern operating system, including Windows. The second big surprise came just last year. In September, I watched in awe as the team from OpenAI asked GPT, their AI model, 60 multiple choice questions from the AP Bio exam, and it got 59 of them right. GPT got a 5, the highest possible score. I knew I had just seen the most important advance in technology since the graphical user interface." Gates went on to write, "The development of AI is as fundamental as the creation of the microprocessor, the personal computer, the internet, and the mobile phone. It will change the way people work, learn, travel, get healthcare, and communicate with each other. Entire industries will reorient around it. Businesses will distinguish themselves by how well they use it." Well, this week's guest has been investing in different forms of AI for 15 years and agrees that AI is transformative technology, just now hitting its inflection point. This week's guest is Michael Lippert, head of technology research at Barron Capital and portfolio manager of the firm's high-growth Barron Opportunity Fund, which he has managed solo since he joined the fund in 2006. The gold-rated Barron Opportunity Fund focuses on identifying, quote, "undeniable and powerful underlying secular growth trends, disrupting industries, and driving significant growth opportunities," and invests in companies with, quote, "durable competitive advantages, cash-generative business models, and double-digit multi-year projected annual returns." What Lippert calls growing faster for longer. I asked him to assess the growth potential of artificial intelligence from an investment point of view. How big a deal is it?
I think the growth potential of artificial intelligence is significant. I think it's a transformation. I think it's what we call a platform change, and you can think of platform changes as going from mainframe computers to going to PCs, to going to the internet, to going to mobile. It's really hard to know exactly what the size is because we're so early on. And when we think about sizing it, we think about the impact it will have on applications or use cases that we have today. For example, Microsoft just this week rolling out what they call Copilot across Microsoft Outlook to help you summarize an email or draft an email. And this is, only their first shot at it, right, at the product. It will continue to iterate and improve, as we've basically seen in the era that we live in now, the internet or the cloud era. Things, every time you sign in, the application that you're using, whether it's as a consumer or as a business person, gets better. So the one thing I will say is, it reminds me honestly of the early days of the internet or the early days of the iPhone. It's going to be big, but exactly how big, it's really hard to say. Because I was even talking to one of my colleagues today, and everyone used the metaphor of innings. We were kind of laughing like, we're not even in the first inning yet. We're kind of in warm-up. So that's how early we are. But what do we have? We have a couple of data points. So let me give you a few, for example. NVIDIA just reported earnings and gave guidance for the forward quarter. Wall Street was looking for roughly $7 billion of total revenues, and they guided to $11 billion. So beating Wall Street by not a couple of $100 million, which is amazing, or 10%, but beating Wall Street by something close to 50%, by $4 billion. I say the other thing is, you heard this from the CEO of AMD, who they'd like to be the number 2 player.
Advanced Micro Devices, right?
Yeah, Advanced Micro Devices against NVIDIA. You heard this the other day from TSMC, Taiwan Semiconductor Management Company, who in Taiwan manufactures these high-end chips. And both of them talked about, a CAGR, a compound annual growth rate for the next several years of something like 50% for what they call accelerated computing chips that go into AI. That's pretty explosive growth.
Mike, you did a piece recently on artificial intelligence for Barron Capital. It was very instructive, and it really helped me learn more about this new technology. And I just want to let our viewers know that it's available on Barron Capital's website, and also we will provide a link to it on our website, wealthtrack.com. Microsoft is a major holding of yours. I think it's your largest holding by far. You own NVIDIA, you own AMD, and you told me in a prior conversation that basically you've been investing in AI for the last 15 years.
We called it big data, which was the term of art for a number of years. Then I think we switched to artificial intelligence. I think for a while it was /big data /AI. Just as things have evolved, and when you're communicating to your shareholders, you want to talk in the way that they're going to hear and read. Basically, the march has been an advance in computing, but when it started as big data and even the first stages of AI, it was really to access your data better, more intelligently, more targeted, to make sure that you were learning, and for business people, for businesses to make smarter decisions, who to hire for a salesperson, who to call for an HR person, who to promote, for example. For consumers, the use cases, of course, were so many different things. Like on Spotify, what song should you listen to next? That was from what they call a recommender system. Same thing on Netflix, the same thing when you were shopping on an e-commerce site like Amazon. So this was the early use cases and applications of AI. Another famous one, of course, which I'm sure we'll talk about, is autonomous driving. Tesla's Autopilot, also trained based on AI and utilizing basically machine intelligence, right? The robot computer is driving the car, you're not.
And again, Tesla, one of your top holdings, has been for many years.
Correct. And so generative AI is almost the ability to generate an answer in different ways. So the answer obviously could be words. Summarize an email or summarize an article. Draft my quarterly letter, write a poem. We've seen some artists write songs. Another use case right now, which is one of the early ones that's been well adopted, is helping developers write software. So you're actually generating something. We've also seen movies, we've seen pictures. I would say that's the main difference. The second advancement is these LLMs, large language models, are frankly even better at digging into your own data to come up with better answers. And when you think of language, and Jensen Huang, who is the CEO of NVIDIA, he said this, right? So you're now allowed to talk to a computer, program a computer using the English language. But you think about other use cases such as healthcare, DNA sequencing, proteins. They're just another language that these systems will help us basically translate, unlock, and hopefully really help humanity when we think about using AI for designing better drugs and treatments.
How are you going to invest in this kind of this new frontier of this advanced artificial intelligence?
Yeah, that's a great question. And throughout my career at the firm, Barron, I've been here 22 years. Ron founded this firm 40 years ago. We used to have some different ways of describing it, but we really invest in big secular trends, secular themes. I've called them in my letters, generational shifts. And these are things that are going to last for a long, long time. When ChatGPT, basically stunned the world with its public release in November, we were frankly well placed. Microsoft, who is a part owner of OpenAI and a major beneficiary of a ChatGPT and GPT-4, the LLM that they've now developed. NVIDIA, whose chips these systems are built on top of, particularly for training. They were two of the biggest positions in our portfolio going into the year, or actually at the end of last year, and we were massive beneficiaries of that. And last year, for example, the market decided that we were going into a recession. We obviously went through the fastest interest rate increase in 50 years. It had an impact on multiples, particularly tech multiples that are considered to be long duration stocks. And we added significantly to companies like NVIDIA, like AMD, some other semiconductor companies, understanding, the shift to what we call accelerated computing, understanding that AI was going to be a big future, workload and application. But, honestly, we knew about generative AI, but we didn't have a call on, the so-called iPhone moment of ChatGPT. Since that happened, we've been drilling down in our research to really try to figure out not just which companies can put out a press release or, talk about a product that they're going to release, but really trying to focus on the reality of this. Who are going to be the beneficiaries? Who are going to be the losers? Which one do we have question marks on? In the piece that we put on the Barron website that you talked about earlier, we laid out what we call the layers of AI, from semiconductors to the data centers or cloud computing systems, to the models themselves, to the data, to the application, to the end users, to really try to figure out where we thought the most value. And so at several layers, we do think there's a lot of value, but it's different.
So who may fall behind, and you address that in a couple of your reports, one of them being Alphabet, the parent of Google, which used to be one of your largest holdings, and I guess it is no longer in the top 10 at any rate, according to my
we did decrease our weight in Google, and I'll tell you the balance that we made for why we decided to keep it. So the one thing I said, the critical ingredient for differentiated AI is data. And honestly, I'm not sure there's anybody with truly better data than Google. They know every search that we've done, they 90% search market share out of China. So every search that we've done for at least the last 20, 25 years, what we do on the internet with Chrome, what we do using their email and other services, they have an enormous amount of unbelievable data.
Right.
But they're also an incumbent with a fantastic search business, again, 90% market share outside of China. And all of that's going to be challenged because I do think the consumer will one day not go to search as it is today, but will go to a chatbot for information, for planning a trip, for shopping. Will Google be that place? Maybe. Will it be, ChatGPT individually, or will it be ChatGPT through, Bard, which is Microsoft? It's just so hard to know right now. And, we did, scenario analysis. Let's say even Google wins, but they own 2/3 market share in a new world versus 90% market share. And it's so early to know what the monetization will be, of AI, and we know the costs are higher, that we just thought that there were just, different risks where, Google went from being, pretty practically an effective monopoly. I hope the antitrust folks don't listen to me on that one. To,
I'm sure
just
they
being,
are.
to just being in a much more, candidly challenged position. And I don't think that, I haven't concluded that they're not going to be a winner, but again, 2/3 market share is different than 90. And so we decided to keep Google, but decrease our weight in our portfolio. That's what the judgment we made so far.
You also told me that last year in the market decline, that one of the biggest changes that you made, talking about disruptive technologies and where the growth lasting longer, was semiconductors. So you've increased your weightings in semiconductors. So talk to us a little bit about that.
Yeah, so for many years we've been an investor in the space. One of the best company visits I've ever had in my career was sitting in a conference room with Jensen Huang at the whiteboard explaining accelerated computing, AI, NVIDIA's differentiation, their entire ecosystem to us. It was really a highlight moment of my career, and all my colleagues that were with us say that. So we've been an investor for a long time. We've been investors in other semiconductor companies also for many years. But, I was underweight that space as we got to the fall, and all the work that we're continuing to do on NVIDIA, on cloud computing, on the so-called end of Moore's law in an age that was dominated by the Intels of the world, to the new age of accelerated computing or parallel processing. We knew that there was something really going on there, and that the long-term secular theme, yes, with the ups and downs of the cyclical, was the world is going to need as many semiconductors as they could get for a long time. But the market often, gets myopic, and we haven't hit the recession yet, but a lot of technology, software, cloud computing, semiconductors first started hitting the recession last year. And so all these stocks traded down. And we just took advantage, based on honestly, our fundamental work, and of course then the prices of these stocks, we took advantage of that opportunity to significantly increase the weighting in our portfolio. So, the three I called out in my quarterly letters are just probably our three biggest weights, and that's NVIDIA and AMD, which I discussed. Indie Semiconductor is a company that went public through a SPAC. That was a little black mark against them, but we've been investors since that public offering. But we've also had investments in companies like Marvell, which does the networking, a company called Empower, which does the power management. I'm sure I may be forgetting one or two other, but ASML, which does the lithography for making the advanced chips. Those are some of the investments we've made across the semiconductor space.
As far as artificial intelligence is concerned, among your top holdings as well are Amazon and Meta, which are of great interest to many of our viewers because they own them. But how are they beneficiaries of artificial intelligence?
I think both companies will be beneficiaries of AI in major ways. For Amazon, for some simple purposes, let's just divide it in two. They're obviously the dominant, global e-commerce retailer. And think of the data that they have on you and every other consumer about how you shop, what you want. If you buy A, are you more likely to buy B? Already today using AI for recommendations of what you should buy. I said earlier that having the right data is critical to AI.
Right.
I also think the way that we shop will change. And Amazon, of course, has to innovate on this, but one day there will be a chatbot or the like that you will go to on Amazon rather than doing a search. You will start talking to Amazon about the kind of products that you want. I need, shorts for my kids. My kid is a youth large and he loves soccer. Please show me a set of shorts. And they will. The other side of the business is, of course, the cloud computing business. I've said that I do believe AI workloads will be built on top of these cloud computing platforms. Amazon today is the largest platform. Right now, maybe Microsoft Azure has the lead in AI, or at least that's perceived. But we know Amazon is doing lots of things in that area. For example, developing their own chips to deliver, great computing and networking to their customers, delivering their own large language models, as well as other large language models that you can have on their platform, and the so-called other tools to build these workloads. So I think they will be a major competitor to have AI workloads on their platform. Meta, Facebook, Instagram is not dissimilar. I mean, they have enormous amounts of data from having, 2+ billion global users who basically interact with them every single day. So whether it's what content, to show you, it's what they're doing on their messaging platforms, including WhatsApp, for you to engage with retailers and businesses, and using AI to suggest the right things to you and for you. We know they're competing with TikTok and what's called Reels, short form video. Again, knowing what to show each person is based on AI. And just this week, they quote unquote open sourced their own model, and announced a partnership with Microsoft, for example, where that model is going to be available on the Microsoft Azure platform. But they will make that model, available on other platforms. And if you are building your own use cases on the Meta model, you will have to pay them one day when you roll out enterprise workloads. And the other thing that they've gotten a lot of criticism for is the so-called metaverse. I think they've right-sized their investment in that. But when you think about the future metaverse and the important role that generative AI is going to play in how you interact with it, what you see on it, future games or future content, I think it's really important.
And Tesla is one of your major holdings as well, and again has been for a long time. Autonomous driving, you think, is a major disruptive technology.
Autonomous driving has been built on AI, machine learning, for years. Even what we call today, which is ADAS, which are basically driver assistance, safety systems that most cars have. These are computing systems that are basically being trained by computers. They are a form of AI. So getting to what they call level 3, level 4, ultimately level 5 autonomous driving, which is, the human being doing less and less to one day the car, drives itself, is frankly probably one of the most challenging AI workloads or developments, honestly, in human history. Tesla just had their conference call. There was lots of talk on AI, and Elon talked about a number of things that you need, and two of the things that he talked about are what we've been talking about in our session today: data and compute. Elon is rolling out Tesla's own in-house developed chip they call Dojo, but he also joked on the call that if I could get more chips from NVIDIA and Jensen Huang, I would buy up as many as I can, and that our future training systems will utilize both chips. And when it comes on the data side, nobody has the real world driving data that Tesla has. And by improving their compute, they'll be able to train their systems, faster than anybody.
How much does Twitter matter to Tesla?
Yeah, I frankly think it matters, very, very little. Let's be real. What Elon's been able to do with multiple companies is, I'm not sure there's a lot of precedent for it. And when you think about, for example, just take SpaceX, which we are investors in, and Tesla, what they've been able to do. So you don't have to guess it. You don't have to predict it. Yes, sometimes he lays out schedules for when they're going to have autonomous driving or full self-driving that they haven't met. But think about what they've already done today with, Tesla today has the best-selling electric vehicle, or the best-selling car, not just electric vehicle in the world, in the Model Y. And anyone that drives these cars knows how incredible they are. On SpaceX, no one else has ever landed a rocket from space. That used to be science fiction. It's a reality. There's somewhere over 100 in a row. They are 80 or 90% of the payload to orbit this year. So these are real things that they've done, and he's been able to do both things incredibly well. And yes, if it was only Elon, would I be worried with how he's splitting his time? Because it's almost, inhuman to do all of that. But no, he has lots of really, really good people.
One investment for a long-term diversified portfolio.
I'm going to pick two, if you'd allow me. I would pick NVIDIA and I would pick Tesla, which we talked about a lot today. And I've always kind of joked about, that we try to look at where the world's going. I'm a sports guy, and I quoted Wayne Gretzky, who was asked, why is he a great hockey player? You're not big, you're not strong, you have a great slap shot. I skate to where the puck is going. I've always loved that line. And honestly, it is undeniable where the world is going in terms of AI, the type of compute that we need, which is called accelerated computing or parallel processing. NVIDIA is, the most important company there.
But 90% market share, is that right in these particular chips?
In these chips today, even if AMD carves out and others carve out 20, it's still going to be 80 growing, call it 50. I think it's pretty amazing. And they have a whole other ecosystem, including software products that, are it's just scratching the surface. Wall Street doesn't even know what the software numbers are, and I think they're going to be significant for NVIDIA going forward. And when you think about AI, I will be retired when people are still having, Wall Street talks about the impact of AI. And I'd say the same thing is true of what's going on in the automotive space. Number one is EVs. I truly believe that one day no one will drive what they call an ICE car, internal combustion engine car. All will be EVs. I think Tesla will be the leader, not the only, but they will be the leader. Autonomous driving is obviously another major trend, which we've talked about. And I'd say the last one is what they call shared mobility. Elon calls the robo-taxi. Today we think of it as Uber. And I wonder whether in the future all people or as many people as today will own a car, but they still want mobility, but they will subscribe to miles on somebody's network. And their cost per mile to travel around will be much, much less than it is today. I don't want to overstate it, but I think most people think about them like, they're kind of undeniable trends. And I think the two companies that I talked about are clear in a way the pioneers and leaders against these trends.
Michael Lippert, thank you so much for joining us once again for a fascinating conversation on Wealth Track.
Thank you.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's action point picks up on a theme of Mike Lippert's, that once he has made the well-researched decision to invest in a company, he generally stays with it. The same applies to individual portfolio decisions. So this week's action point is stay the course with your investments. As Vanguard's founder Jack Bogle famously wrote in one of his terrific investment books, Common Sense on Mutual Funds, I've said stay the course 1,000 times, and I meant it every time. In one of Warren Buffett's wonderful annual letters to Berkshire Hathaway shareholders, this one in 1990, he described his and business partner Charlie Munger's approach. Lethargy bordering on sloth remains the cornerstone of our investment style. So many wise investors, having learned from hard experience, have counseled that market timing doesn't work and that sitting tight does. Sound advice to follow. Well, next week, choosing the right mutual funds. Russ Kinnell, Morningstar's mutual fund maven, will tell us how to do it and what's in his personal portfolio. In this week's extra feature, Michael Lippert talks about what he loves the most about his job, what keeps him motivated. Don't forget to follow us on Facebook, Twitter, and our YouTube channel. Thank you for joining us. Have a fantastic weekend and make the week ahead a healthy, profitable, and productive one.